Hello and welcome. This is Brandon Wendell. I'm doing some more analysis on the markets. Right now, we're looking at the 10-year treasuries on the December contract daily chart. And we've had a bit of a breakdown here. Obviously, the trend is moving very strong to the downside. We had a small correction or interruption, if you will. Really, what we've got going on is prices were making some fresh lows, but we didn't have the momentum we needed to continue these lows. So, as you can see, we had a little bit of a pullback. This was a positive divergence. Now, when we had this positive divergence, we did not get any reversal signals. Prices came down to make another low. We are well below 40 on the RSI. That's suggesting that we're going to continue to move to the downside. So nothing here is telling me we're going to stop going down. As a matter of fact, if we take a look at the most recent impulse down, correction back up, you can see we stalled in the neighborhood of 61.8%, which means our next move should take us down to 129.25, which is the 100% duplication of the preceding impulse. So if that's the case, let's see if there's another opportunity to be able to short the 10-year treasury targeting that 125. I'm sorry, 129.25. That's what it is. There we go, 125.925. So we're going to drop down from the daily time frame to the 4-hour. And looking at that 4-hour time frame, let's take a look and see if we've got an area of supply for our pullback. As you can see, we've got a little bit more bullish activity here. We've gone above 60 on the RSI, but then immediately went back below 40 once again. So lots of choppiness here. Unfortunately, I'm not seeing anything great for entry points. If I'm looking left and up for a zone, I just don't have one. We have basing, leg. But this doesn't qualify as a good zone in this area. It just doesn't work. The nearest zone is probably going to be a bit higher, but I've got to keep in mind my trend. So when I'm looking for zones, typically what will happen is you got to find your zone on the most recent impulse. So what that means is, in this case, we had impulse down, correction up, impulse down, correction up, and now we're on a new impulse down. And in history, when you go back to these highs, if you were trying to short those highs, the best place to short is, number one, at a zone of a supply, but number two, at a supply zone that was formed on the preceding impulse. So, looking back here, you can see we had that big impulse down. So as we corrected back up, this is where you would have wanted to enter, and you can see it actually was drop, base, and some weakness right there, drop, and continue down. It wasn't the strongest of zones because it ran into another zone almost immediately. So once again, there's another impulse down, correcting back up. And as we're correcting back up, let's see, it looks as though we've got a zone right here. Let's see if that's what ended up holding. You have drop, base, drop. And it looks like we turned a little bit shy of that one, unfortunately. So it doesn't always work out that it hits a zone, but it turns close to a zone. The most recent one we had right here, drop, base, drop, and sure enough, there we turned in that impulse to the downside. So now we're forming a new impulse down. So far, I do not have a zone here for us to be able to short. So that's what I'm going to be waiting for and looking for, is to see if a new zone gets formed somewhere along the way. Maybe we go down to a 60-minute time frame. And unfortunately, on the 60-minute, well, we're not seeing anything great, but there is something here. So let me go ahead and clean this up a little bit. We'll start off looking at, yep, that's the zone. Sorry, let me put the magnet on so this gets more accurate. So we have, there we go, drop, base, 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 and drop. So there's your most recent impulse leg and a zone on that impulse leg. So if you're looking to short the 10-year treasury, you're looking at about 131.095 to 131.12.5 as your entry point. Stop loss will obviously go just above. I don't usually give too much of a buffer when it comes to our stops. So we can probably go, let's see, maybe 13.5 or 14. It's a few ticks above. And what I'm looking for my target, if I go back, there's two things I could do. Look for a demand zone, number one, but also look at the most recent impulse, which if I go back to my 4-hour chart, you can see there's my impulse down, correction up. So I can use my projections to let me know where we're likely to go. And I just realized my magnet was off. There it is. And there it is. So going back to the 60-minute time frame, what we are now looking at for a trade opportunity is entry, the 131.095, 131.12.5 with a stop at 131.14. Target 1, 130.22.5. Target 2, 134.5. So that's a possible opportunity. Keep an eye out for that. If we do rally up into this area of supply on the 60-minute chart, make sure the RSI is not above 60. If it is, then you do not sell because there's too much bullish momentum. However, if we are below 60 on the RSI when prices come into the area of supply, then we're likely to turn down from that area and look for more weakness in the 10-year treasuries.